Hi everyone, welcome back to another exclusive podcast from IronFX, where we're dedicated to bringing you the absolute best education to help you take your trading to the next level. In today's podcast, we'll be talking about key economic events. As we start, or as we have started our journey into the world of trading, many of us would have asked ourselves, so what exactly are these economic events, and why do they hold such importance in trading circles? Right, so economic events refer to significant occurrences that impact the economy, such as changes in interest rates, employment reports, or GDP releases. These events serve as crucial indicators of economic health and can greatly influence market sentiment and direction. Now, this can be aimed at a single country level, such as the United States, or as part of a larger economic zone, such as the European Union, right? So take note, we can have data for individual countries as well as a greater economic region as well, right? With the EU being one prime example. Now, let's discuss how these events can sway policymakers because whatever policymakers do, we all know it can have a huge impact on our trading, right? Or on our trading strategies as well. So, when economic data is released, policymakers such as central banks or government officials closely analyze the information to gauge the overall health of the economy. Based on these assessments, right, they may decide to adjust monetary policy, fiscal measures, or regulations to steer the economy in a desired direction. For example, now, in recent years, we've seen an extreme focus on inflation data points such as the Consumer Price Index or the CPI, as well as the Producer Price Index or the PPI for obvious reasons, right? Many governments around the world and central banks are trying to tame inflation. Many have been pretty successful, and for others, it's still a work in progress. Now, how can we as traders leverage such information to our advantage? Well, traders use economic events as valuable tools for market analysis and decision making. By staying informed about upcoming economic releases and understanding the potential impact on various assets, traders can anticipate market movements and adjust their strategies accordingly. Now, how can we equip ourselves with such information? Right, one good particular website that is truly resourceful is Forex Factory. They have an economic calendar where traders are able to filter key economic events across countries, event types such as central bank announcements, employment, inflation, and many more. And of course, we can filter through currencies as well. Not only does this website list the schedule and importance of each individual event, it also includes the link for the specific government or agency source for that particular macroeconomic data point, where we as traders are able to conduct further in-depth research and analysis on that topic. Now, finally, let's highlight the top three economic events that all traders should keep a close eye on. Firstly, central bank meetings, right? Where decisions on interest rates and monetary policy are announced and they can cause significant market volatility. One prime example, of course, would be the FOMC meetings by the Federal Reserve. Secondly, employment reports such as non-farm payrolls provide insights into the labor market conditions and consumer spending trends as well. And thirdly, GDP releases, which indicate the overall economic performance of a country, which can heavily influence investor sentiment. So that wraps up today's episode on key economic events, where we've explored the importance of key economic events in trading, their impact on policymakers, and how traders can utilize this information to their advantage. Before we end, do remember to subscribe to our podcast here at IronFX, where we are dedicated to bringing you the very best education to take your trading to the next level. Until then, happy trading.